Hello, everyone. Welcome to the Heritage Quarter Business Alliance Power Hour. My name is Dan Mulka. I'm the Executive Director of the HCBA. And we're back with another one of our regular podcast series. And we're actually going to introduce a former guest who we're happy to have back. This is Lana Thompson from BMO Harris. Hi, Lana. Thank you for joining us today.
Great. Thank you for having me for this Power Hour.
Oh, and this is a very important topic, too. I know credit scores are very influential in everyone's life, especially when inflation and different things are taking hold, and some people may need to figure out ways to stretch a dollar out, or they're looking to buy their next home, or some significant purchase where credit scores are a important thing. So we figured Lana would be a great guest to have. And Lana, I'm going to ask you to kind of give a little more background about you, and then we'll kind of start with our presentation.
Great, thank you. So my name is Lana Thompson. I'm with BMO Harris Bank, and I run a financial wellness program. So if you are a business owner or you're part of a business and you're listening to this, don't hesitate to invite me to come out and speak with your employees. There's no cost or obligation to the business. It's all about spreading that financial wellness to help everyone that you're working with make real financial progress. So as we start talking about credit scores and credit reports, I think in this country, we're really two important numbers. We're our social security number or our state ID, and we are our credit score because so many things are used with the credit score. Can I get the next slide, please? So we're going to explore the importance of the credit scores and reports, learn how to access the information, build some strategies to improve credit or maintain credit if your credit score is already a good score, and identify how to protect your credit from incorrect claims and fraud. So on the next slide, please. So I'm going to ask a question that you yourself can answer. How well do you know your credit score? Do you have a rough idea of what it is? Do you know exactly what it is? Maybe you don't even know what it is or what a credit score is. And some of you might have heard of things like Credit Karma. I actually use Credit Karma myself, and we'll talk a bit more about that. Next slide, please. So what is the credit score? Well, it's a 3-digit number that tells the lender how likely you are to repay. So think about that. If you've never had credit, so you've never defaulted on anything, but you don't have credit at all, well, then that's going to be tough for a lender to look at because the credit score is the likelihood as to whether or not you're going to pay. So it's important that you have a credit score. And for those of you who may be listening who have somebody in your life that is going into adulthood and maybe hasn't established a credit score yet, it's really something to think about. The sooner, the better, provided it's done the right way so that it starts off right and that individual is not having to repair it. So if you look at these numbers, we'll go to the middle at good. So anywhere between 670 and 739 is considered good. Below that is fair or poor. And no credit score, as I said, can be as tough to navigate as a good credit score. Very good, 740 to 799. Exceptional, 800 to 850. Now, creditors will take a look at your credit score to see not only if they will approve you, but what rate they will approve you at. So I'm going to stop there for a moment. Dan, are you hearing me okay?
I am. I actually had a question for you, then I realized I was on mute. When you mention folks that do not have a credit score, is that considered like 000, or is it like a and I was just curious, is there a standard number for someone who's getting their first credit card way in their 18 years of age, or is it kind of,
Well,
is it just totally a different?
right. Here's the problem. If you're 18 and you don't have a credit score, and so there's really not a number to it. If there's just nothing reporting so that you do not have a credit score, you'll not be able to get a regular credit card. What you may do is get what's called a guaranteed card, where, and we don't have them at BMO Harris, but they're out there, is you can go to a company where you'll pay them. So for example, you'll give them $500. They'll give you a credit card with a $500 limit. You'll use that card, and that way it'll build a credit score. There's some other ways you can build that score as well, and we'll talk about those later on. But excellent question, and we will talk more about that as we go. Next slide, please.
Yep, I was going to say, it looks like it's actually the next slide.
All right, so the strategies to build the credit. So that was perfect timing. So to build your credit, for your credit score to be the highest that it can possibly be, you will need to have some kind of a line of credit. So a line of credit is either a credit card or an actual line of credit. And what that means is revolving. So that you open it, it has a certain limit, you use it, you pay it down, you use it again, you pay it down, and that will give you the best chance of raising that credit score. So as I said, that guaranteed credit card can do it. There's another thing that we have at BMO Harris, which is called a credit builder loan, and many parents of young people going into adulthood have used this for their young person. And what it is it's a loan where we will give that person a loan that has no credit score. We will actually hold the funds that we're lending. So for example, it might be $2,000 over 2 years. We'll set up monthly payments. They will make the monthly payments. We will report those to the credit bureau, which will help increase the credit score. And then at the end, we'll hand them the money with interest, because we'll put the money in a CD for them over that 2-year period of time. So let's say you have a young person who is just going into adulthood, and they're looking to buy their first car, and they want to borrow a few $1,000s to buy that first car. They know it's going to take them a bit of time to save it up. Well, they can do that with the credit builder loan. And once their credit limit has reached the limit where they can then get approved for a credit card, then the next thing would be to get a credit card so that they'd have that revolving credit along with that credit builder loan, which would really shoot their score up. I once did a seminar at a business where a young man who was 29 years old had no credit score because his parents had always taught him, if you don't have the money, you don't make the purchase. The challenge was that now he has a good job, he's making a good pay, he's never missed any kind of a bill, but he doesn't have a credit score. So he can't get approved for credit in the traditional way. So like I said, starting earlier is better. Request that your payment history be reported. In some cases, you can request that your utility payments get recorded on your credit bureau so that you can start some credit history. Sometimes they will do it, sometimes they won't. You can open a joint account. So sometimes parents will open a joint credit card with that young person so that they're able to then get approved for that credit card and build that credit score. And of course, you want to pay your bills on time and not miss any payments because you want to build a good solid credit score. Next slide. So here's the tale of two friends. So Anna and Bella, they have steady incomes and they're going to buy a home. Bella receives a loan without any trouble, but Anna has a difficult time getting her mortgage. When Anna finally gets her loan approved, her interest rates and insurance premiums are higher than her friends. Why do you think this happened to Anna? Well, remember I said the credit score was the likelihood that you're going to pay. So when the creditor looked at Bella's score, she had a higher score because she was approved right away without any trouble. She would have got a lower rate of interest, and her insurance premiums would have been lower as well. Anna had the higher score, so it was harder for her to get approved. And when she did get approved, her interest rate was higher. Something to think about if you are a homeowner. When did you get that mortgage? What was your score when you first got your mortgage? And the reason that I'm asking you to think about that question is because perhaps you were younger, you were not as far along, your credit score wasn't as good, so you may be paying a higher rate of interest than necessary. It may make sense for you to refinance your mortgage at a lower rate if your score is now a lot better. I will give a wonderful example here. Two young individuals got married. They knew they wanted to buy their home in 2 years' time, and they both had poor credit. So we gave a credit builder loan to both him and her. We asked them how much they wanted their down payment to be, and we split that amount in half. So each of them got a credit builder loan for half of the down payment. In that 2-year period of time, they never missed a payment. When that 2 years was done, we handed them back, because remember I said we hold the funds in a CD. We handed them back that money with interest, which was their down payment. Their score, because they had never missed a payment, was 780. We were able to approve them for their pre-approved loan, as well as when they got their home, they found the home they wanted, they got their mortgage, we were able to give them the best rate that we were offering at the time because their score was so solid.
I was going to say that probably ended up giving them several $1,000s in the long run of savings.
When you think about a mortgage in particular, that's the loan we're going to have probably for the longest length of time. You think for 25 or 30 years, when you look at what your mortgage payment is every month and how that interest adds up over time, that's thousands and thousands of dollars. So doing one of two things, either making sure your credit score is good at the time that you get your mortgage, working hard at it beforehand, or going back and taking that second look as you move along the path. Once your credit score is better, then doing a refinance, that will save you all sorts of money going forward. Back to our...
I would say that's a great story.
It is. It's a wonderful story. Back to the slides. The other thing as well is that when those young people went to see a realtor, when you have a pre-approved mortgage, your realtor works a lot harder for you because they know you're already pre-approved. They know you're serious. They know what your range is because they know how much you've been approved for. So they know how much of a house to show you, but they also know if you find that home, you're likely to strike a deal. Next slide.
Yep.
All right, so in this country, there are 3 main credit bureaus: Experian, Equifax, and Transunion. Now, those 3 credit bureaus talk to each other via computer. In the old days, they did not. So you might go to bank 1 that used Experian and get told no, but then you might go to bank 2 that used Equifax and hear yes. Nowadays, no, they talk to each other. Now, when you hear the term FICO score, what it really is sort of the average between these 3. So you might look at your credit score on something like a Credit Karma, and it's one number, and then you go to do something at your bank and it's slightly a different number. That's because your bank may use one of these 3 and the Credit Karma or the FICO score is really the average of all three, depending on where we have all of our credit out there. Next slide. So the one thing that I will say too, if you go to one place and you hear no, you can ask if they will share with you what your credit score is. They may not share what your report is, but they may share what your actual number is so that you know what you are working with. They may, if your score seems different than what it should be based on how you've been paying your bills and maybe the last time you looked at your score, then you do want to have a look, maybe call the 3 credit bureaus to see if everything reporting is yours. I will show you a way to get a free credit report a little later, because there is fraud, identity theft and fraud out there. And when people steal your identity, it's not usually because you're a really cool person. It's so that they can get credit in your name, which they usually don't pay. And that's where you could find your credit score is down because there's some kind of fraud on your report. So I think this is probably one of the most important slides. How is that credit score actually calculated? Well, it's all a computer, remember. So the computer doesn't know you. The computer doesn't know what your intentions are, your intentions to pay, your wanting to pay. It's only looking at really what's there on the computer. So the amount owed is very important. The amount owed as compared to what's available. So they usually say don't use more than 50 to 60% of the credit that you have available to you, which is why it's so important to have revolving credit. So if you have a credit card that has a credit limit of $5,000 and you have used all $5,000, your credit score is going to go down for a time. Now, if that's only 1 month and you pay it off in full, it's going to shoot right back up. But for the period of time that that credit card is up to a $5,000 balance and you have a $5,000 limit, if you're just making the minimum payments, your credit score is going to go down because the amount owed is almost 100% of what's available to you. Now, do I suggest that you get 10 cards so that you can spread it around? No. But I do suggest that you have more than one credit card, perhaps 2. There's a couple of reasons. Number 1, you have your credit card that you use for your normal day-to-day expenses. And you have one credit card that's maybe just sort of an extra that you keep locked up somewhere in case for some reason the balance gets high on the one that you're using all the time. You still have that room because it's it's a combination of those 2 cards. And also, if you are a victim of some kind of identity theft or fraud on your credit card, then you have a backup. So having more than one really makes sense.
And 2, we never know when those situations are going to come up where all of a sudden you need brakes on your car or something like that, and maybe that's where you need that backup. There's many different good ways, and it's not like you're having 74 backups. One or two. Maybe 2 if you're Best Buy and you want the extra points.
Yeah, I'm glad you brought that up, because anyone who is listening who owns a home and has equity in their home should have an equity line of credit on their home. I know a lot of individuals will look at me and say, no, I don't want to. I've already got my mortgage. I don't want to encumber my home anymore. But it's like having a credit card on your home. And the reason it's so important is because you don't pay any interest if you don't use it. It revolves just like a credit card. So you mentioned your brakes go out. So let's say that's going to be a $2,000 bill. And you think, wow, I don't have $2,000 available right now, but I'm going to use my credit card to pay for it because I want the points, then I'm going to pay that credit card off with my line of credit. Because my credit card's probably at 17%, my line of credit is probably at 3%. So then it makes more sense. It's still revolving. You've now got the room again on your credit card. You've used some room out of your line of credit, which you're eligible for 80% of the value of the home, including your mortgage. So easy math, if you have $100,000 house, and you have $50,000 mortgage, you can qualify for a $30,000 line of credit. That would be the most based on your other debts and your credit score. But you could have $30,000. You can sleep at night knowing that you have it. You're not paying any interest if you're not using it, but it's there. Should something happen, in particular to that home where you must make those repairs, use your credit card for the points, pay it off at the much lower rate of interest on the line of credit.
Now, actually, I have a good follow-up question for you here, and it's almost in terms of my real life, actually, because right now, my wife and I, we are looking at a new home and things of that nature, and we're trying to save money. But on the off chance something catastrophic happens, and you have to choose, you don't want to go credit card, but that home line of credit, compared to saving the freedom of having the equity for the new home. Is it almost better that way rather than totally messing with your credit score? Because that could, you don't want to go too far in debt and then, not qualify for a home loan.
Well, in most cases, you still owe the money, right? You owe the money either on a credit card or on a home equity line of credit. So you're always better to look at it and say, this is all the credit that I owe, whether it be student loans, whether it be healthcare costs, whether it, whatever it is, I owe this money. What's the cheapest way from an interest rate perspective that I can pay it back? Because the cheapest way that I can pay it back is going to be the way that I can pay it back the fastest. So that should be more of the consideration. I had a friend who actually owed $50,000 in taxes. She had the equity in her home, but she didn't want to use the home. She just wanted to make the payments to the government. And I said, you do realize how much interest you are paying to the government to pay that off, where you could have a home equity line of credit. She just could not grasp the idea that she would be putting more against her actual home. But again, really think about, I owe the money. It doesn't really matter where I'm taking it from, but it should be from the place that I can pay the lowest rate of interest.
Makes total sense.
Okay, so back to that calculation. So the amount owed compared to what we have outstanding. Payment history is always going to be important. If you pay your bills on time, it's going to help your credit score. The length of your credit history. The only thing I will say is be careful. Now, at my age, this isn't going to be a factor. But let's say you are a younger person. You got your first credit card at 25, and now you're 30. And now you want to get a different credit card because it's going to have much better rewards. So you figure you'll close the card that you got when you were 25. Well, the challenge is that to the credit bureau, that new credit card, that's new credit. And the 5 years since you've had your other credit card isn't going to count. So just make sure. I often get asked, geez, is it a bad thing for me to cancel a credit card? No, but if it's the first credit card that you ever got, just make sure that you have other credit in between so that the computer doesn't think that you just started your credit with that new card. So the length of your credit history can make a difference, in particular the younger you are. New credit. Best example I have for this is when you go car shopping. So when you go car shopping and the dealership is going to give you, 1% for a year, or you go mattress shopping and they say no interest for 1 year, absolutely take advantage of those. However, ask if they do their credit in-house. If they do it in-house, you're fine, because you're going to fill out an application, they're going to check your credit score, and if everything's okay, they're going to extend you the credit. If they farm it out, they're going to automatically, by computer, send it out. They could send it out to 10 different banks. Let's say they send it out to 10 different banks. Now, remember, the credit bureau is a computer. So that computer thinks, oh, you are out there seeking credit, and that's going to lower your score. Now, once the computer realizes that you are not seeking credit, that you just did that one car loan and that's all you're doing, your credit score will go up again. But you want to be very careful. So, Dan, be careful if you're going to buy that home, that you're not having a whole bunch of inquiries on your credit bureau right before you're going to qualify for that mortgage, because that could bring your credit score down. So it's really something to think about. And I often have people say, oh, well, is this going to be a hard pull on my credit bureau? Well, a soft pull, if you get a new account, that's a soft pull. It doesn't count. If you get any kind of credit, though, it is a hard pull. So you just want to make sure of the timing, especially, so once your mortgage is approved, then you don't have to worry about it. But when you are waiting for your approval, or you're waiting for your interest rate to be set, you don't want to have a bunch of inquiries that could then in fact lower your score.
And we actually had one of our real estate lawyers make a comment very similar, which you are echoing exactly. You don't want to all of a sudden make it look like you're on a spending spree, and you're thinking you're getting all this money, and you want to just make sure that you're keeping it kind of simple and easy when you're going through the process.
Yeah, so the credit bureau, this computer that's the credit bureau, thinks that you could be a credit seeker. And the whole premise behind it is that people who find themselves in financial trouble oftentimes will then be going out seeking credit to fix it. So and then the types of credit. So remember, I talked about that revolving credit, how important it is. I've talked to many people who say, I got in trouble at one point with credit cards. I've canceled all my credit cards. I don't want another one. I never want to have another one. And that's fine if that person does not have the willpower not to use it. But as I said, unless they have a line of credit on their home or some kind of line of credit, their score will never be as high as it can be. Revolving credit is the best and fastest way to raise your score. The reason is, remember, it's the probability that you're going to pay. So in particular, a credit card. When you're approved for a credit card, there's no security involved. Yep, you signed here, you said you'd pay, you have a $5,000 limit, you use it, you pay it back, you use it, you pay it back. The credit card company doesn't care what you're spending your money on. There's no limitations to what you can use it for, as long as credit cards are accepted. But you are paying it back. They are trusting you will pay it back. If you do pay it back, you're getting more points. We know if we stop paying our mortgage indefinitely, eventually they're going to come and take our house, or they're going to repossess our car. So it's very different when it's revolving credit, because there's more trust involved. And especially if you keep that revolving credit within 50 to 60% of the limit, you're going to be doing what you can to raise that credit score the fastest. So if you're thinking you don't want to have a credit card, you're still better off to have one, even if you lock it in a drawer and never use it and it's reporting to your bureau. Then you do have revolving credit that you've used 0% of, and it's reporting to your bureau. I have had a strange question asked of me. When I get a credit card, should I always pay it in full? Or when I first get it, should I pay just some minimum payments? Will that help my score? Because I'm paying some interest. Absolutely not. That is a falsehood that I don't know where it ever got started. If you have a credit card and you're able to pay it in full each month, pay it in full each month. The credit card company, they make their money overall on the interest. Somebody doesn't pay. That doesn't need to be you. And there are going to be points in time where, for whatever reason, the brakes go out on the car. You have to put $2,000 on. Maybe it's going to take you a couple of months to pay it off. So you are going to pay the credit card company some interest. But we don't want that to be the habit, because that revolving credit on that credit card is, unless you're going to a shark or something, that's going to be the highest credit that you're going to pay for is on your credit cards. Next slide. Okay, so Anna bought a new house further away from work. She needs a new way to get to work. She wants to get a car now. She has taken some steps to improve her credit because, remember, it wasn't as good. She's eligible for a car loan, but she has a problem. She needs a co-signer. She's going to ask her friend Bella to help her out and co-sign. Should she? Yes or no? Well, I would say if you are going to co-sign for somebody, there's a couple of things you have to be aware of. If they default, that hurts your credit as well. So you can co-sign for somebody. Make sure you are getting copies of all the statements. You are co-signed on the loan, so you can be a person that gets the copies of the statements. You want the copies of the statements every month so that you can be in control. Are those payments being made? I've heard stories of parents who co-sign for loans for their young people, and the young people are too scared to tell their parents that they aren't making the payment, so they go, yep, everything's fine, because they think, no, I'm gonna catch this up. In the meantime, the parent's credit score is going down. So get copies of the statement, and in the worst case scenario, make those payments on your own, because that's only going to hurt your score, your own credit score. So be very careful when you're making the decision to co-sign. Next slide. So who uses that credit report? Well, that credit report is the snapshot of everything that we've talked about that goes into creating your credit score. So all of the credit that you have goes onto a credit report, and that credit report is looked at. And it is very important, because let's say, for example, the only credit that you're doing poorly on is a healthcare bill. Financial institutions such as ours will look at that much differently than a credit card that you defaulted on or a loan payment that you defaulted on. Other things are, remember I said, utility payments usually aren't reported on your credit report. However, if you are defaulting on them, they could be reporting. My sister was in a car accident, and she had a bill that she couldn't pay, but she made a deal with the hospital that she would pay them a certain amount each month, and they told her as long as she paid that every month, it would not reflect negatively on her credit report, and therefore not negatively affect her credit score. and she was still able to get other credit as she continued to pay for that. Next slide.
I was going to say, just quickly jumping in here, it seems like it's very important if you find yourself in trouble to be more open and honest with whoever has that credit card.
Oh, absolutely. The one thing that I will say is if you know you can't pay, contact them in advance. We tend to put our head in the sand and say, well, I can't pay, so I'm not going to call, I'm not going to accept their calls or whatever. The more that the institution or the credit card company or whatever, the more that they know, the more that they put in. And you never know. I had one person who told me they ran into some trouble one month. They called. They had no idea there was a 1 month payment forgiveness option. And they had never forgiven their payment before. They got it forgiven and they got caught up the following month. Or they'll say, can you pay a portion of it? And if you do, we won't negatively report it on the credit report to the credit bureau, and therefore it won't negatively reflect on your credit report. So important. Okay, so www.annualcreditreport.com. You can get one free credit report a year, or you can get more if there's fraud, if you need to apply for welfare, or you're denied a loan or credit application, you can get an extra copy. But it is important that you have a look periodically at your credit report, and you can do it once a year for free, and this is safe. www.annualcreditreport.com. Pretty easy. Next slide is the free credit score. Oh, it's not on here. It's the same thing. www.freeannualcreditscore.com. Sort of the same, but instead of credit report, put in credit score. You can also talk to each of the credit bureaus, and they will give you the score. There may be a fee, but you can talk to them. They do have people that actually answer the phone. Next slide. Reading your credit report. So there's a ton of information that's actually on that credit report when you look at it. There's going to be the personal information, your name, your birth date, your address, social security number, your employer. And so, it may not be up to date with your employer, but oftentimes it even updates that. And I will tell you that nowadays a lot of employers are actually pulling your credit report to have a look at it, which, you want to rent an apartment, they're going to look at it. You want to get a cell phone, they're going to look at it. So it's really important that credit score and that credit report is clean. Now, on your credit report as well are going to be delinquent or unpaid taxes, judgments, lawsuits, bankruptcies, that kind of thing. Open and closed accounts, and your debt status. So your credit card, what your current balance is, that kind of thing, and what it's rated. Are you R1, which means, or are you number one credit rated, so you haven't missed any payments? It's going to show if you're delinquent on any payments. And then organizations, people, or agencies that have requested to verify your credit in the last 2 years. And again, that's that whole credit seeker thing. So if there's a great big huge list, then it'll look like you're a credit seeker. Now, if something happens, for some reason you miss your credit card payment and you go, oh my gosh, I was on vacation, it totally slipped my mind, I didn't make my minimum payment or my full payment, I'm going to go in, I'm going to rectify it right away. Missing one payment may lower your credit score for a very short time, but it's not going to change things dramatically over a long period of time. One of the things that I've noticed, and one of the reasons that I got Credit Karma, because I just wanted myself to see how it worked. And every once in a while, I'll get a notice, oh, your credit score has changed. And if it goes down, I'll sort of look, oh, credit card balances are up right now. It's gonna go back down or whatever. But if it were to change drastically, then I would know I better have a look at the actual report and see what's going on. Next slide. So important dates to remember: the date your account was open. Remember, I alluded to that when I talked about, you want that length of history. The dates of delinquency, because you want those delinquencies on the bottom, and they eventually fall off. I believe, between 5 and 7 years, and those delinquent things fall off. The dates of any public record, with taxes and things like that. You want to get things up to date as quickly as possible so that they can come off. And there's nothing wrong with you reaching out to your debtors, and Dan had mentioned this, reaching out and actually talking to them and say, okay, we made this agreement, the debt is now paid, will you take it off my credit bureau? And or my credit report. And in some cases, they will absolutely take it off, and then it no longer shows on your report. So your report really makes up your score. So if you have a great credit score, your report's going to reflect that. If you have a poor credit score, your report's going to reflect that as well. And what we want to do, if we've got some work to do, is get a copy of that report, make sure we have a look at it. How can we get these debts paid off? Like I said, think about that line of credit as that sleep at night safety net, which I think is very important. And I think a lot of people don't realize why that's so very important. I can always sleep at night because when it comes to money that I can get my hands on if I need to, is because I know that line of credit is there. I know I'm not paying interest when I don't owe anything on it, but I also know that if I do have money owing on it, it's going to be at a nice low rate of interest, and I can pay it off at any time with no penalty. It's just like a credit card. And that I will still have my credit card to use for day-to-day charges, but any money that is borrowed off my line of credit, I can pay it down at any time at a nice low rate of interest. Again, really important that it's that low rate of interest. Next slide. How to dispute items on your credit report. Write a letter to the credit reporting agency, and that's important. So the more documentation you have, if you send a letter, against certified mail, and all the documents that you need to show within that letter. Next, I think we have some other information. Steps for repairing your credit. Monitor your credit report and score to see that it is going in the right direction. Make sure you're paying your bills on time. Credit counseling, and then financial products, meaning maybe that line of credit on your home, or maybe even a debt consolidation loan, which will lower your payments, put things together. It may be a longer period of time that you pay it off, but it will free up some cash so you don't find yourself going further down that hole. Next slide. There is the Credit Repair Organizations Act. Let's look at the next slide. This is going to show us an example of some harm that can happen. There are, as sadly as it is, credit repair scams. So our friend Anna went to a company. They promised to remove her bad credit from her report. All she has to do is pay an upfront fee. She's worried about her bad debts, but the company assures her that it can scrub all the negative information from her report. The company advises Anna not to contact the bureaus directly because that will negatively affect all of their efforts. So the next slide, please. Let's look at the red flags we saw there. An upfront fee for a credit repair service. Red flag. Promise to scrub the negative information. They can't do that. They can help you repair it. A promise to scrub or alter legitimate information. No, you don't want your actual birth date changed on your credit report. A warning to you not to contact the credit bureaus directly. You are entitled to do so. It is your legal right. You should be reaching out to the credit bureaus, and you would probably do that before you actually went for a credit repair service. There are legitimate credit repair services, but you do want to look for those red flags. Never sign blank paperwork at a credit repair place. Or, like I said, they'll want to put a fake social security number on your credit report. Absolutely not. So just beware. And you really have to think, because if you are going through this, it's going to be very tough. And so you're going to be in a stressful situation as it is, but still, we have to keep our head when it comes to the red flags. Next slide. So these are some legitimate credit counseling services with the websites there: National Foundation for Credit Counseling, Financial Coaching Association of America, a couple legitimate credit counseling services. Next slide. Strategies. Now, do not use less than 30% of your available credit. You can usually get by with a little more than that, but the lower the better. So in that vein, do not max out your credit cards, because that will automatically lower your credit score. Pay your bills on time. Your credit cards, if possible, pay them in full, because that's going to be a really high rate of interest. Pay your loan payments on time. Do not apply for multiple loans and credit cards at the same time. That's all that pulling of your credit score. Make a financial plan to reduce debt. Create a monthly budget and follow that monthly budget, the 50-30-20 rule. 50% on needs, 30 on wants, and 20 to pay down debt. And review your credit report. Make sure it is accurate. The one thing I will say when it comes to payments is, if you've got money coming into the home, so if you've got a steady paycheck coming in, set up your bills on automatic payment. Your utility bills, you can set up your credit card bill on automatic payment. You can set up a lot of your bills on auto pay. That way, even if you are on vacation or you're really busy and you're just not thinking about it, you know those bills are getting paid. I do say align them in the way that works for you. Maybe it's the beginning of each month, maybe it's the end, maybe you align it to your paydays. Maybe it's every second Friday that you set it up, however you're paid, so that you know. The one thing that usually works well is if you align it to your payments to your payday, then when that pay hits and that payment is made the same day, whatever's left in your account, that's what you have for the next 2 weeks until you get that next paycheck, because those bills that you have aligned to that particular payroll have already been paid. So next slide. All right, so today we went through a lot of material: how to understand the importance of the score and report, how to get that free report and score, which you can get once a year, strategies to build and improve that credit, how to protect yourself from incorrect claims and frauds. The important thing is to really understand what your credit is, and that's where that all-important budget may come in. Is really, when you start having some problems, the first thing to do is that budget. And I would say, take a month and say, okay, this is all the money that comes into the home, not gross pay, but net pay. These are all the expenses going out of the home. Now, can we apply the 50-30-20 rule and begin to pay that down on our own? If so, great. And if you do that early enough, You're doing it enough before your credit is actually damaged. As soon as you find yourself having difficulty making your payments, you want to get proactive, because once it starts to damage your credit score, your credit report, then it's only going to continue to go downhill, because now you're paying more and more interest. So it may feel like you're constantly paying and not getting anywhere because of the high rate of interest. You want to sit down with your bank or talk to your creditors to find out, are there any options? Can I do a credit consolidation where I'm putting some credit together? Even with credit cards, we have right now, if you owe money on a credit card, you get a new credit card with BMO, you transfer that balance. There will be a fee, but we will give you 12 months to pay off that credit card at 0% interest. So that is worth the fee that you're paying. So always think about doing the math. What am I going to pay in interest? Can I get this corrected before it negatively affects my credit bureau? And so, definitely get a hold of your creditors as soon as you're in trouble. See what kind of a deal that you can make. Dan, are there any questions that you have or that might be out there?
Currently, actually, you did a really great job in explaining this, and I know it can get confusing and overwhelming for some folks, and so it is much appreciated. We are going to put some notes on our episode page, so that way, too, you can you can see a little bit of this presentation. And I suggest, even if we saw a lot of people kind of coming in on their lunch hour, if you get a chance, kind of rewind and take the whole thing in, because it's going to be worth it, because no matter who you are, credit's a very important part of our life.
Can you put up the credit offer, my banking offer?
Yep, it's going to be just 2 seconds. I'm trying to make that work right now.
One of the things when I do these presentations is I want to invite people who aren't currently dealing with us, or people who are, to come and see us. Our bankers are really there to help you make real financial progress. And that may be restructuring your credit, having a good look at your credit, helping you out, giving you that advice and service. But in order to introduce you to the bank, I come with a banking offer.
And we are working on that as we
speak. We're working on getting it up. So the banking offer that I want to provide is going to help from you paying fees as well, because our hard-earned money, when we talk about credit and paying down our credit, we want as much of our hard-earned money to go to our needs and wants and paying down debt as possible, and we want the least amount possible to go towards fees. So to start off with, I have a no-fee checking account, and I believe, and our bank believes, that there's many out there who think just because I have a bank account, there it is, if you can make it a little bigger.
Yep, we're good.
Because I have a bank account, I have to pay fees. Well, that's just not the case. So,
apologize, everybody. We're trying to make it.
It's right there, but let me just tell you about it. So we have a free checking account where there's no minimum balance required. You don't have to have direct deposit going into the account. It's just a free checking account. It comes with a debit card. It comes with all the digital banking. It comes with Zelle, all for free. You're doing your banking for free. You get a debit card with more fee-free ATM access than any other bank in the country. So we have your banking for free, you're getting your money in for free, you're taking your money out for free, and as well, if you do decide to put some direct deposit in, we can give you up to $200 in a bonus. What about a savings account? Well, it's important to build that all-important savings account just in case something happens and your brakes go and you have that emergency savings. We want to reward you for that. For a full year, from the time you open your savings account, for every month that you can increase it by $200, we're going to give you $5. At the end of the year, you would have saved $2,400. If you were able to save $200 every month, we would have paid you $60, or the equivalent of 2.5% interest. And I guarantee you, you're not making 2.5% interest on any savings account that you have right now. Credit card, no fee credit card. And that credit card collects points that you can use for merchandise, travel, or cash back on the card. If you charge $2,000 on the card in the first 90 days, even if you pay it off in full, we don't want you to pay any interest, we will give you a $250 statement credit. So that is up to $510 a bonus right there. If you have more direct deposit, you can get an even bigger initial checking account bonus. But it's all about not paying fees, starting that all-important savings account, starting that credit card to help build your credit. Now, I want to make it as easy as possible. On this flyer, my name, my email address, my phone number is on there if I can provide any advice and service. As well, that QR code that you see, that's Apply Now. And if you like what you hear, that QR code will take you directly to account opening. And I'm sharing this with anybody watching. Share this QR code with anyone you know that's paying fees. I talk to young people who say, oh, well, I got a student account, and when I turn 25, then I have to pay all these fees. Well, I say, get your big boy pants on right now. Open this free checking account right now, and you don't have to worry about fees in the future. This can be your forever checking account. Share this with anyone that you know that's paying fees, that maybe wants to get rewarded to build that savings account, maybe wants to get into a great credit card at no annual fee, that they can use the points for whatever they want, be it merchandise, travel, or cash back. So I want to thank you for having me on this Power Hour. It was my pleasure to spend time with you, and I hope we can do it again soon.
Definitely. And we're going to make sure that if you're not watching on Facebook or anything, if you watch us on YouTube or on the podcast, everything you need to know will be in the show notes. So that way we'll have links to all the codes. You can actually see this flyer in person if you're listening to us on the audio. And we want to make sure, no fees. It's simple.
Yeah.
So
I want to teach you something. I want to save you fees. And I'll also be a financial resource for you.
Yep,
so on that flyer, again, is my name, address, email, or my name, my email address, my phone number. Feel free to reach out. I am here to provide any advice and service.
And thank you again. This has been very informative. I know with our new Facebook Live, we saw a lot of people tuning in. So we hope that you guys stay tuned. We're definitely going to have Lana back for more as well. And let us know too, if there's a specific topic that you are interested in hearing about, just shoot an email to info@myhcba.com. That's My Heritage Corridor Business Alliance. And we'll kind of put it in rotation. This is here for you, for your learning. So once again, thank you, Lana, for your time. And just a quick reminder, no problem. And just a quick reminder for those, whether if you're watching us on Facebook, make sure you like us on YouTube, hit that subscribe button. If you're on Apple Podcasts, Spotify, or any of those services, make sure you click that button as well. And then this is Dan with the Heritage Corridor Business Alliance. Make sure you check us out, myhcba.com. Have a great rest of your day, and we look forward to seeing you on the next version of the Power Hour. Thank you.